Hi, this is Dave and welcome to the weekly video market recap, closing out the week for Friday, January the 18th, 2013. So I'm recording this video after the market closed. It's about 5 o'clock on Friday. I figured I'd get a jump on this. I stayed to watch the market closing out the day, and as I've mentioned before, Fridays are very Friday closes are really significant closes for the market. They really tell a lot. So the weekly closes are really important. So let's take a look at the market starting from as we usually do, the weekly chart, or I'm sorry, the daily chart of the Dow futures. So we're now trading this is the Dow futures. We're trading the March contract. And if you look at this, if you look at the market action here, there's a lot of lines on the chart here, but essentially the key levels that we were looking at this week and starting out from last week. I mean, essentially last week, if we just kind of backtrack, what we were looking at was a test of, let me just mark this level here, a test of these highs, which are, they're significant highs because they're, the September, October 2012 highs, but they are actually highs going back. They're basically essentially multi-year highs, and what we were looking for was we couldn't get through them back in back in September, back in October, and essentially these were the resistance levels, the major resistance levels right up and around here. So we made a run for these highs in September. We failed. We came back. We tried to test them again. We failed. Put in like a double top. We couldn't get through them, and then we had a significant, that precipitated a significant pullback into, November, December of 2012. So now what we had shaping up in last week's video, what we were talking about was, let's actually just go a little bit back in time. Back in this area here, when we did the video, we were looking at a possible retest of these highs. And then what happened, though, was that we got a significant pullback first. It ended up being, a 50 to 61.8% retracement of the low down here to the high, up here. So as long, and then we were talking about, well, we weren't really interested in shorting that level because, we were having, this was a support zone. And it was also a significant level that we had marked on our charts. In fact, let me just clear this off, and we were looking at, specifically we were looking at, I believe, this chart. So let me actually jump over to it, at YM, this chart here, which has some of the other levels. It's the same chart. This is just tracking the at YM, which is the continuous contract of the Dow. So it is the same chart. It has the same levels. So let me just change this as we did the last chart to red. So there was a significant resistance level there. And what we were talking about was those fib levels were coming in right around these support levels right in around 12,800 to 12,709. So all we had done there was, for example, we had drawn a Fibonacci retracement from these lows to these highs at the time, which were the relevant lows and the relevant highs. We held this support zone. You can see that, the 50% and the 61.8% overlapped, these significant support resistance lines. And we held that level. We put in a swing point. We pushed higher. So at this point, I hope this is all making sense, by the way. And if it's not, I apologize. But I'll try and tie this all together. Essentially, when we pushed through these highs this time, in this trend line here, I thought we were going to push up into these highs, but what we did was we pulled back into these support levels, which was fine as long as we held that support zone. But then in last week's video, and this is where things get current and relevant, in last week's video, when we pushed back up to these highs and we were sort of consolidating, and then we were holding this 8-period exponential moving average, which is this yellow, this yellow line, that opened up the door in last week's video for, we were talking about this level back, these highs back in here around 13,500, 13,540-ish. So we were looking 13,000, basically 13,000 13,500 to 13,540-ish was, the range. So what we were looking at was, we were so close to those highs now that, we held support here, that this area here was a magnet. So essentially what we did was we closed out the week with a retest of those levels. We came right into those levels on Thursday. We probed above there, and then we pulled back a little bit below, the 15,300 and 15,530 level. But what's really significant about this, so that kind of played out, and we were saying, that was a possibility in last week's video. That's what we were kind of expecting to have happen, was a test of these levels. But we actually, if you look at this day here, we closed right at the highs of new highs. That's the significant point. We closed at new highs at 13,583. So we closed above these highs, these highs, and we actually closed above these highs in here at the highs of the day. So that's really significant. This is a very strong market. All indications are bullish, right? We've got my trending indicators bullish, stochastics are bullish. However, the fast stochastics are buried, at 96%, which is way oversold. The MACD is, close to the top of its oscillator range, and it is net bullish. The volume isn't significantly high or anything like that. But having said that, we are net bullish. We closed at new highs, multi-year highs. The problem is, or the challenge is, that we're at major resistance. So this is the daily chart. Now, if you go out to the, and I want to spend a little bit of time on this because I think it's really important. If you go out to, for example, the weekly chart, the YM on the weekly chart, what you can see here is, this is a weekly chart, right? And the last time we were up and around these levels was all the way back in, we just broke above, these contracts get repriced a little bit, so the levels get a little bit skewed because it's a continuous contract, and the contracts expire essentially every quarter, and in the futures market, and they're getting repriced. So, but essentially what you're looking at is we broke above the highs going back to, before we sold off in 2008 and precipitated the financial crisis. So this is really significant. We're above these highs now. Okay, now if we want to get a cleaner look at this, I'll jump over to, the some other indices that track the S&P and things like that. But essentially, here's the weekly chart. Let me just zoom out to give perspective. So here were the highs going back in 2008, and then around here before the financial crisis, and look at where we are in 2013. We retested the highs back in October, and now here we are back in January of 2013. So here was the, the retest of the highs in 2012. Well, now in 2013, here we are, 5 years later, just above those highs again. So this is really significant now, but the challenge point is that we are at these highs. So the question is, are we going to push through these highs, or are we going to consolidate, or are we going to pull back from these levels? That's the main question that needs to be asked at this point. I think from my perspective, the risk is really high just getting long this move. But, it looks like we're, here we are in 2008, 2012. Now we're, breaking above in 2013. So if you look at this from the weekly chart perspective, you can see a clear uptrend pattern, a long-term uptrend pattern from these, 09 lows, in and around these levels. Okay, so you can see a clear uptrend here. Now, let's take a look at, let's say, the same chart from, let's see, the DG30. No, that's not it. I want to look at, like, for example, the, well, we'll jump over to this in a second. Let me just finish off some of these, some of this analysis. So this is really, we're at major resistance essentially. So just because we closed above these highs and at new highs, we still have to be cognizant that we are really retesting some major resistance levels. So if we jump over, let's say, and look at these charts from a different perspective, okay, let's take a look at the Darvas squeeze perspective, which is, this gives me a lot of directional bias. This is something that I look at with these major significant events. So, for example, here's a weekly chart of the Dow futures, and we significantly just fired a Darvas squeeze long to the high side. So we've got a break of this Darvas box resistance on the weekly chart at 13,536 with potential targets over 1,000 Dow points higher. That is really significant. Okay, this is a fresh signal on the weekly chart. All indications are bullish. Okay, the MACD, the trending indicator, although you've got a bit of a divergence here on the trending indicator on the weekly chart. But having said that, what happened the last time that these signals fired off? Well, if we look back the last time that this signal fired off, okay, this was back in August, September 2012. What you had essentially here was you had a long signal fire, and it went a little bit higher, and then it pulled back significantly from, let's say, 13,000, just, 13,031 or something like that, all the way back into 12,800. That's a 200-point Dow pullback over the course of 2 or 3 weeks. So here's a breakout point. I'm just going to mark this. Here's the breakout point, and then, you went a little bit higher, and then you pulled back to the 8 period on the weekly. Then you pulled back, even lower down to, this trend line. That's, just over 200 Dow points. But essentially then what happened was then you pushed up, over the course of it. This was a 5-week pattern, and it took, let's see, the breakout. Here's 1 week. Here's 2 weeks. The third week you held the lows, and then you pushed off and you broke the highs again, and it took another week to print new highs, and then you consolidated, at 13,500. So that was, those highs back in that we were talking about back in October 2012. Now, as I mentioned, I'm spending a little time on this because this is really significant. So now you're at, these highs here, and this took a couple of weeks to follow through, and you had a major pullback before that happened. So let's take a look at what happened the last time, even before that this signal fired off. So this is really telling back here. If you look at back in December of 2011, here was a significant Darvas squeeze long on the weekly chart. So you had these highs in place, pulled back, you broke these highs here, and in December 2011, I'd even posted some stuff on some public forums talking about how we had, a weekly Darvas squeeze to the high side, and I was bullish on the market. Now, having said that, we printed along at 11,876, and we pulled back. When that signal fired over the course of the next 2 weeks, we pulled back all the way down to like 11,400, 11,500. That's a 3, okay, that is a 3 to 500, okay, point Dow pullback. That's really significant. So we fired a long signal, but we pulled all the way back into the 21 exponential period moving average on the weekly chart, 300 to 500 points in the Dow. And then, over the course of, let's say, the signal fired here, here's 1 week, 2 weeks, 3 weeks. It took 3 weeks to get back to retest those highs. The 4th week we consolidated. The 5th week we pushed above, but we went sideways, doji week. We got a little bit of strength on the 6th week, and on the 7th week, we were off to the races right here. So if you look at that, that is really significant because even though I'm very bullish on this market right now, from a weekly chart perspective, and because we're breaking new highs, we could pull back, anywhere from 1 to 500 Dow points if history proves correct, before we actually follow through and then look at what happened. So we broke out here 11,800, and then we printed, 13,000. That's 1,000 to 1,200 Dow points higher. So this is really, you had a major pullback here, 300 to 500 points, but look at where you ended up. You know, you ended up over 1,000 Dow points higher. So this is why this is really significant. So the risk is getting long in this area is that you've got a major pullback and then you're going to push higher. So, and that happened the last time here too. You got a pullback and then you pushed higher. So at this point in time, I'm super, super bullish on this market. I hope I've made my point, but could I get long? You know, could I get long right in this area here when the last two major weekly signals that fired here, you know, pulled back into support, you know, down into, let's say, 13,200, that's 300 points lower, or into this trend line, almost 500 points lower. No, I can't really, you know, I couldn't really personally get long this market with this signal firing, recognizing that we could potentially pull back over the next couple of weeks. So what I'm actually looking for is this scenario to play out. Now, if it just pushes higher without me, you know, that's fine. The risk is too high to just get aboard this move at this point in time. So what I'm personally looking for is this scenario where, you know, maybe we print a little bit higher next week and then we pull back significantly into some of these lower support levels, you know, into the support zone, you know, anywhere from 1 to, let's say, 500 Dow points lower, okay, lower. And then we hope we find support, we come back through the high here, and then we, you know, then we're off to the races within, let's say, 2 to 7 weeks. 2 to 7 weeks, you know, to go higher. So at this point in time, that's what I'm really looking for. I'm looking for this sort of a pattern here. Boom, couple of weeks, and then to push new highs. Now, where could those new highs go? Well, you know, this isn't trading advice or anything like that, but for educational purposes only, you know, this signal, if this Darvis box here, this weekly Darvis box, if we project it out on a one-to-one basis, you know, the range of this box from here to here, well, that could bring us all the way up to, you know, 14,709, okay, based on this breakout pattern here. So is that possible? Yeah, over the next several months, it is possible. So that's why I'm net bullish on the market, looking for a potential pullback first and then a follow through. Okay, so that's the Dow. So okay, so what, Dave? The Dow looks great, you know, but this could take multiple weeks to unfold. Okay, so let's take a look then at the S&P. The S&P has actually been leading this on the weekly chart, and this is what, you know, is causing me a little bit of trouble with this methodology here, is that here's the weekly high at 1462 in the S&P futures. We broke through that 2 weeks ago now, you know, 2 weeks ago Friday, and the long signal printed at 1462. We closed the market at today at 1479, so we are what, 18 points higher in the S&P, 18 points above, you know, this long signal, which actually fired right there. That's this level here. So if you look at that, then where could we go? Well, you know, this is printing potential targets as high as, you know, 1592 in the S&P futures. So everything looks, you know, net bullish, and this pattern is, you know, it's 2 weeks in, and we just fired a long squeeze on the weekly chart. MACD is net bullish. Trending indicators net bullish, although we are printing a bit of a divergence here, which isn't to say that it's going to fail, but, you know, so we could get a pullback into support here at, you know, 1438, 1413, somewhere in this zone before pushing higher. But, you know, this is constructive action on the weekly chart of the S&P futures. So if we look then at, let's take a look at the transports then from a Dow theory perspective. If you look at the transports have, you know, they've fired a Darvis squeeze, you know, going back, this is this week, so 1, 2, 3, 4 weeks ago, you know, just over a month ago, 5 weeks ago, 4 to 5 weeks ago. And if you look at this, we were in a really long consolidation range. And from a Dow theory perspective, these are weekly bars. This is a multi-week move. We broke out over here, took, you know, 1, 2 weeks to follow through, and now we're approaching, you know, these highs here. So at this point in time, to me, it looks like the upside is limited, and I'd be looking for a pullback before a push higher into some of these higher levels. But I just wanted to point out that from a Dow theory perspective, the transport index is, is firing on all cylinders, and it's really confirming, this move, although we are a little bit high, 75 to 80%, into this move, just judging by, by eye. So at this point in time, the transports are confirming this move, but we are, really, really high into this move. This move in the transports is mature, and the move in the indices are, they're fairly new. So now, if we look at this, let's look at some other symbols that track, the S&P and the Nasdaq. Let's look at, let's say, for example, the Dow. If we look at the Dow, I'll take a quick look at the Nasdaq. The Nasdaq broke a Darvis box on the weekly, but it's really a lot weaker than the other indices. So the Nasdaq is a little bit laggy, probably because Apple is pretty laggy. But if we look at, let's say, the DIA, which tracks, the Dow, it's like a Dow ETF, the diamonds. You're approaching these highs and you haven't broken out. You don't have any fresh signals on the diamonds. Let's take a look at the SPY. If we look at the SPY, we do have a long signal on the SPY at 148 with a potential target of 153. Okay, so so we've got some constructive action happening there in the SPY, which tracks the S&P 500. So that's all I have for the indices this week. So let's take a look then. This is a methodology, the Darvis squeeze, that I've been working on for a long time, and this is something that I use for major directional, trades, major directional bias, because it kind of tells me, where the major pressures are in these markets, especially on weekly charts. So I just wanted to point that out. Let's flip back to the more traditional charts on the daily chart. Let's take a look at some other key things. Let's look at the dollar index and see where we are at in the dollar index this week. And if we look at the dollar index, we're back in and around, this wedge pattern, this range. I'm just going to zoom in. Okay, so we're holding support at 79, and we're below major resistance at 80. We're just below 80. So are we just below 80, I believe? Well, this shows that we're right at about 80. So I've got the resistance line at 80, 80.20, 80.21. So we're above 80, but we're just below this resistance. So we're just in this sideways consolidation here, back into this wedge pattern. That's not really telling us a lot in the dollar index. Let's take a look at the euro. So we're really holding long-term support in the dollar index. Taking a look at the euro futures. The euro futures are, these are weekly charts, by the way. The euro futures are, bullish. Let's flip over to the daily chart, which is a little bit, more what we look at. So the daily chart looks net bullish. Okay, I'm just going to extend this trend line out. I mean, we could put the trend line there, or we could put the trend line there. The euro is holding above $1.3282. There's another key level. Resistance is at $1.3420. So we can see up here, support, the 8-period moving average is coming in at $1.3294. Support is coming in at horizontal support, $1.3282. So the euro looks net bullish. We're putting in a series of higher highs, higher lows, but we're really just trapped in this 200 tick or 200 pip if you're looking at the forex market, this 200 pip range. So we're kind of sideways, for last week, the entire week we're sideways in between that 200 pip range. So a move out of $1.3420 to the high side would be pretty constructive for the euro, pretty bullish for the euro. That would bring us into some of these, $1.3420. That would bring us into some of these highs in and around here at these swing points. let's say $1.3523. So if we could get above $1.3420, that would open up the door for 100 ticks or 100 pips in the Forex market, to $1.3520-ish. So that's kind of what we're looking at there. That would be the next major resistance level in the euro. So that's kind of what we've got going on there. To me, these markets are a little bit, they're choppy. They're just consolidating. There's not a lot of directional action on the dollar index or the euro, even though I think the euro is net, the euro's net bullish. So I wanted to point out a couple other charts I've been looking at this week, in terms of commodities and stuff like that. Let's look at the NG. Let's look at the natural gas futures. So natural gas futures, I think, are interesting. I've been talking to some of the guys in my live trading room here about, the natural gas. And I said, going back at the beginning of the week or late last week, I like the pattern that's forming on the natural gas. It's breaking this downtrend line. And I was looking right and around this area. I didn't actually take a directional trade or a swing trade, but I was actually saying, if we break this downtrend line here, I'd like to get long somewhere in and around, maybe around somewhere around 325 in the natural gas futures. Now, I wouldn't swing trade the natural gas futures because they'll, the leverage will just destroy you. They'll rip your head off, even one contract in there. But I mean, if you look at this move here, a break of $3.25. Now we're at fib resistance at 356. So that's, that's like 25.50. That's like almost 28 cents, if my math is correct, of upside movement in the natural gas futures. So you've got this swing point resistance coming in here. But this was a good trade, in between, $3.25 up to 350. At this point in time, I don't know if we're going to come and test the 618 of this move from this high to this low, the significant high to low, but you have the potential to go up to $3.69, or we could pull back here, put in another swing point, and then push to this level. So I wouldn't want to get long the move here, but I would be interested, let's say, if we were to pull back into some sort of support levels, either at this trend line, this rising trend line, or if we were to come back and hold the 20 EMA. That looks really interesting. Another thing that looks interesting and constructive on this is that the 8 exponential, which is this yellow line, is crossing over the 20. So you can see this is an early pattern reversal signal from this downtrend. You can see clearly where support is, support. You can see now where we're closer to resistance. So in order to get, a better kind of risk reward trade, I'd really like to see a pullback at this point. Now, what I was really looking to see, if you look at the stochastics here, the stochastics are, this is sort of what I was looking at. Now you've got a sell pattern in the fast stochastic. I really would have liked to see, a pullback into support, although we didn't get it. We just kind of went straight up from here. But I would have liked to see at this point in time when the stochastics were, let's say, when we broke out somewhere in around here, push a little bit higher, and then these stochastics to get, buried to the low side, like let's say below 20, and then to look for a move into support, look at getting long in that area and then pushing off. That never happened. Okay, so those were some of the things I was looking for. Now, so natural gas looks net bullish, reversal from this downtrend, but I think, in order to get long it, I'd like to see, some sort of a pullback. So a pullback to, let's say, I'd be looking at multiple levels from multiple methodologies, but let's say if this is a swing point high, a move back down into this trend line would line up with that, 61.8% retracement around, that is around the breakout point, $3.25, 324 here. If we got to move all the way back into there, I'd be looking for it to hold that level and signs of strength, off of that level. I'd want to see it hold $3.24 on a closing basis. So I like natural gas. Question is, where do you really get into it? So if we take a look at silver, same kind of story. You're breaking this downtrend and we have a constructive basing pattern here. I like this pattern. We're at 50% resistance. from a fib perspective at $31.90, let's say 2 cents. So I'd like to see, you know, it's looking constructive. It looks very much like natural gas. You know, you've got, you know, the trending indicator looks like it's going to roll to the high side. You broke that downtrend line. The 8 is crossing above the 20-period exponential moving average. You've got a trend line on the bottom, you know, support. You've got a, you know, constructive basing pattern that's been forming. So, you know, you could go as high as, I'm not sure where those fibs are coming in. Let me redraw these fibs. But I mean, you've got, you know, here's the major high, major low kind of thing. You're at 50%. You know, you could go up to the 61.2. I'd like to see a pullback, though, before getting, you know, into that move. And if you take a look at, for example, gold futures, it's the same kind of situation where, you know, you've had this basing pattern. You've got kind of a double bottom. You broke this downtrend line, and that opens up the door. Let me get rid of some of these fibs here. So this would open up the door to a move into, you know, this trend line around, you know, let me just extend this out somewhere into that trend line around, you know, 1710, let's say 1700, 1710. So could we test 1700 on the upside in gold? Yeah, I think so. The trick is, you know, where do you get into a move like this? So what you'd want to see is, you know, getting into a move like this, what I would be looking for is some kind of a pullback to support. You know, this is early stage reversal, some sort of a pullback. Let's say if this is a swing point, let's say you get a move like this, back down into, you know, close to where the breakout was, and then, you know, you could look to get long somewhere in there, or that's what I'd be looking for rather, and then a move, you know, into, make sure it finds support, buy it on the way off of that point, and look for a move into, you know, 1700, 1710. And then if it could break that trend line, then you could really get something going, you know, back to the high side. So this is the major resistance. This trend line resistance is the major resistance. Now, if you look at, you know, this major high to this major low, then what you'd be looking at, you see you have 50% resistance coming in pretty close to where that trend line is. So in order to get a directional trend shift bias out of this, you know, you'd need to break this trend line, and then you'd need to break above this 61.8% retracement at 1734. So that's kind of all I have this week in the markets. I mean, I could review a lot of other markets like, you know, the bonds and things like that and try to correlate them all over. But I think, you know, I don't want this video. This video is probably already approaching half an hour or so. It's already long enough. If there's any questions, feel free to email me. You could email me at, you know, if you have any questions, or if there's any markets you want me to, cover, just out of curiosity and see what my opinion is on them. I love doing that. Dave at markettradingconcepts.com. Okay, so feel free to email me if you have any questions. If there's any markets you want me to look at, any comments, feel free to email me. I'd be happy to look at some of these markets. So that's all I have this week, and I look forward to you know, seeing everybody at the next CSTA meeting, at an upcoming meetup, you know, at our trading office here in Burlington. And have a great weekend, good trading and good investing. Have a great weekend and take care.